Growing your credit score sometimes can be tricky, and there's 5 simple rules that you need to follow in order to get the highest credit score possible. But first, you need to understand what credit score really is. Basically, banks use credit score to understand how likely you are to repay them a loan that they are giving to you. They take information from 3 major credit bureaus: Equifax, TransUnion, and Experian. Credit bureaus, on the other hand, collects this information from banks, credit card issuer, auto credit company, and a bunch of other places. And they use 5 major factors to calculate your credit score. Payment history, which accounts for 35%, amount owed or your credit usage, length of credit history, and there is 2 other: credit mix and how many newly opened credit cards you have. Let's start with payment history first. That affects 35% of your credit score. It basically tracks if you have late payments and how many. The rule of thumb is the less you miss your payments, the more your score will grow over time. In case if you do miss your payment at any given time, do not panic. Your score will slowly recover over time, even though it's not ideal for you. Pro tip: late payments is not reported 30 days after due date. So if your bill is due, you will have to pay late fee, but it will not be reported up until 30 days after your bill due date. For example, if your due date is on January 1st, you will have time until January 30th to pay your bill. And if you will not still pay your bill until January 30th, in February it's gonna be reported on your credit report. The second factor that credit bureaus uses to determine your credit score is how much you actually use in your credit card. It's called credit utilization. This is basically percentage that you actually use on your total credit limit. For example, you have $1,000 limit on your credit card and you used $400. That means your utilization ratio or percentage that you use is 40%, which is a lot. To grow and keep best score possible, you need to have utilization rate below 10%. So if you have $1,000 limit, try to use less than $100 a month. One more thing with that is that your information is not reported in real time, but instead credit card companies report the amount that you owe on a date when your statement closes. So you can look up when your statement day is closing and pay your balance couple days before, so you will show basically 0 balance on your card, even though you may use 80%, 100% of your credit limit. The third factor that credit bureaus uses is length of your credit history. So length of credit is basically a metric that calculates total average length of how long your credit cards has been open, or your credit lines, or your auto loans, or your mortgage account. For example, if you have 3 credit cards, one is opened 3 years ago, the second credit card is opened 1 year ago, and you have a new credit card which is 3 months old. Divide that amount by 3 and you will have your credit length of 17 months on average. So your average length of credit history will be 17 months, not 3 years and not 3 months, just average of what you have. The more history you have, the better it will be to get to your golden 850 credit score. Long credit history just show the lenders that you're good with managing your debt and you will likely pay your future bills on time as you did before. The longer you manage your debt with good history, the more likely you will pay your debt in the future in the eyes of lenders and credit bureaus. So if you have your old credit card that you are not using and you just wanted to cancel it and it not costing you any annual fee, I would personally just keep this card, just cut it in half, in little pieces, throw it away in a trash can, and you will not have access to it, but you gonna have longer credit history and it will push your credit score to the best score possible. Fun fact, to have 850 credit score, you need average 10 plus year of excellent credit history. How do you think it's manageable? Do you think a lot of people can do this or not many? Number 4 is credit mix or types of credit open. Credit mix accounts for only 10% of your credit score, and that telling lenders how good you are with managing different types of debt. For example, you have auto loan, or you may have payment for the phone, and you also have $20,000 credit limit on your credit card. And if you are managing all of that with perfection, you pay your auto loan on time, you pay your phone bill on time, and you pay off credit card every single month, that's saying to the credit card bureaus and lenders that you are actually managing your debt pretty well, and they can give you even more debt so you can pay them more interest. And the last thing, number 5 on my list, is how many newly opened credit accounts you have. The more you apply on credit cards or loan, the more this will affect you in a short term. Try not to apply for every single card that you see or advertised to you, but rather, if you do need to open new account or shop for car loan or mortgage loan, you're gonna have 30 days period where all of the inquiries that you may have in that period will combine into one, and it's gonna affect your credit score just as a one inquiry. That's because credit bureaus understand that you may have shop for the rate, and they is not taking 25 different inquiries that you have in the 30 days period. Also keep in mind that it may take 2 to 3 months at least to recover from your hard inquiries. There's basically 2 types of inquiries, soft and hard. Soft means like checking your credit score, applying for utilities, or any other soft inquiries. Hard is applying for the mortgage, car loan, getting new credit card. That's a hard inquiry. The less you have hard inquiries, the better. Fun fact, auto insurance company can also take into consideration your credit score. So it's better to have your credit score a little higher than average, so you can save on your auto insurance as well. With that being said, improve your credit score, but don't overthink this. Even though it's super hard to get 850 credit score, it's relatively easy to get to the 700 plus credit score, and in most of the cases you'll be good to go for any mortgage, auto loans and stuff like that. Let me know your thoughts in the comments below, and see you guys in the next video.